Hi everyone, welcome back to the Web3 channel. My name is Zach. In this video, we're looking at Bitcoin because there's some interesting stuff happening around, and we're looking at analyst fear around Bitcoin's price drip as funding rates drop post-Fed. And then we're going to also be looking at some more analysts on a different article. Concerns over possible US regulation adds to nerves as market sentiment calls for losses not gains to form the next moves of Bitcoin. We have been speaking about US regulation on the channel. If you haven't already subscribed for everything happening in the crypto, NFT, and metaverse space. With that being said, let's get into it. Bitcoin created resistance at 37.5k USD on Friday amid an increasing consensus that a new dive was underway. Funding signals dip expectations, data from CTMP and TradingView revealed 37.5k USD as the ceiling that capped price action overnight into Friday. Bitcoin USD has recovered from a trip to local lows of 35.5k USD after comments from the USFR, but previous highs still eluded bulls. Now, with funding rates continuing into negative territory, it seems that the market expected another investigation of the area close to 30k support. Funding turned even more negative post FOMC as investors were spooked by Powell's resolve to fight inflation. A report from crypto research firm Delph Digital summarized, all in all, it seems like the market is expecting Bitcoin to make a lower low after recently testing the 34k level. While sustained low funding rates provide for a squeeze of unsuspecting shorters, mixed emotions prevailed Friday amid news that the US government was allegedly preparing an executive order on cryptocurrency upheaval on the regulatory front, which would come after a debate over the environmental impact of mining. Also echoes the arduous journey of a congressional bill last year that saw fierce opposition over its treatment of crypto for tax purposes. With shorter timeframes looking unappetizing, hopeful analysts turn to investor behaviors for cues. Popular Twitter account Material Scientist, creator of on-chain analytics suite Material Indicators, noted increased sustained buying by one entity this week. In the last week, someone has been twapping a net of 200 million plus with orders of size 10,000 to 100k, making up almost all of the total CBD on Binance. Looking at that right here. As Cointelegraph reported, the data also shows that hodlers remain broadly committed to their positions in line with the midpoint of market cycles. Bollinger adds trial either position. Altcoins continue to follow in step with Bitcoin. 24 hours to Friday seeing limited moves either way. Ether, the largest altcoin by market capitalization, traded up 1.1% as signs began to turn in its favor as an investment at current levels. For John Bollinger, creator of the well-known Bollinger Band indicator, it was time to build an ETH position. I bought a little ETH, a trial position last night with a close step well for crypto. I liked the pattern on the 6 hour and have been looking for an entry, he revealed on Twitter. A lot of high confidence trade and I am probably early, but toe is in and I am focused now. Others were decidedly less enthusiastic about altcoins in general, however, admit a forecast that Bitcoin's market cap dominance could be due for a broader rebound, limiting their capabilities. And that is that for that article. Quickly looking at White House report reportedly preparing executive order on crypto. So look at what's going on there. The Biden administration is expecting to issue an order that would make government agencies begin conducting risk analysis on cryptocurrency as a national security threat. A lot of you will probably be aware of this, but let's go into it. Joe Biden's White House is expected to issue an executive order in the coming week about the US government will take regarding digital assets. A source familiar with the White House plan told Barron's that the executive order would be issued on a national security memorandum. Biden's memorandum would assign some government entities to study crypto, stablecoins, and NFTs with the goal of developing a workable regulatory framework. This is designed to look holistically at digital assets and develop a set of policies that give coherency to what the government is trying to do in this space. Rumors of a potential executive order on crypto have been swirling in recent days. Earlier this week, Forbes reported that those government entities would likely issue reports on their findings by mid-2022 after having looked at the systemic risks of cryptocurrency and their illicit uses. The rationale for the EO falling under national security is that crypto is a cross-border tool for shifting money. The ability of decentralized blockchain technology to circumvent geospecific surveillance or rules means the administration may push for synchronized international regulations with other countries. Eric Balchunas, a senior exchange-traded fund and analyst at Bloomberg, noted earlier on Friday that the Biden administration viewing crypto as a national security may also be behind the constant rejections of Bitcoin spot ETFs. He also referred to the new developments as a broader crypto crackdown in a Friday tweet. pardon me. Broader crackdown, another piece of legislation worrying the crypto industry, was proposed by House Democrats on Tuesday. The America Competes Act, Jerry Brito, executive director for Washington, D.C., based. We've literally already spoken about this, so if you want to watch, if you want to look more into this, it's already on the channel. Meanwhile, supporters among lawmakers are trying to smooth off the rougher edges of already passed legislation. Echoing pleas from crypto industry experts, a bipartisan group of House representatives has asked Biden-nominated Treasury Secretary Janet Yellen to clarify aspects of the infrastructure bill that pertain to digital assets. The infrastructure bill was signed into law last November amid some controversy, as its definition as of a broker is arguably too broad by including miners, software devs, transaction validators, and node operators. A group of bipartisan lawmakers proposed on Wednesday to narrow the scope of what information a broker can obtain to prevent creating an unlevel playing field for transactions in digital assets and those required to provide them. Some brokers, as they are currently defined in the bill, do not have the ability to verify information about senders and receivers of crypto as required by law. Yellen has yet to respond to this request. Then let's have a quick look at general price analysis. We're only going to be looking at Bitcoin because this video is already 6 minutes long, but let's have a look at it right now. Technical analysis points towards early bottoming signs in Bitcoin and altcoins, but analysts forecast another sharp downside move. Bitcoin and major altcoins are turning from overhead resistance levels, indicating that the sentiment remains negative and traders are selling on every available opportunity. Decentrader analyst Philip Swift said the on-chain spent profit output ratio metric, which aggregates the price of purchase versus price sold during a given period, indicates that traders are selling the Bitcoin holdings for a loss. Another metric that is worrying traders is the funding rates, which has further slipped into the negative territory following comments by the USFR. Crypto research firm Delph Digital expects Bitcoin to make a lower low after recently testing the 34K level. Among several bearish projections, there was an uber bullish long-term forecast, which I'm sure a lot of you have heard by now, by Cathie Woodsark Investor. Report projected Bitcoin's price to cross 1 million by 2030 and Ether to reach between 170 to 180,000 during the same period. Could Bitcoin and most major altcoins bottom out near current levels? Let's study the charts of the top 10 cryptocurrencies to find out. So let's specifically look at Bitcoin here, facing stiff resistance in the overhead zone between 37.3k to 39.6. This suggests that bears are unwilling to let go of their advantage and are selling on rallies. The pullback of the past few days has resolved the oversold levels in the relative strength index. The bears will now attempt to resume their downtrend by pulling the BTC below 32.9k USD. If they succeed, the next stop would be 30k. Alternatively, if the price turns up from the current level and rises above 37.3k, it will suggest accumulation at lower levels. The buyers will then attempt to push the price above the 20-day exponential moving average and challenge the 50-day simple moving average. A breaking close above this resistance will signal that the downtrend could be over. What are your thoughts on everything you're seeing here when it comes to both, of course, Bitcoin pricing and, of course, when it comes to regulation? Where do you think the executive order is going to lead? I would love to hear your take on everything happening in the Web3 space. This is the Web3 channel covering everything happening in crypto, NFT, and metaverse news. Have a great day, everyone. I'll see you in the next Web3 video.